Hey, my name is Jordan Kelleher. I am a business broker. I help people buy private small businesses and I help people sell their private small business. So, I wanted to put something together here for the sell side. If you're a business owner and you are thinking about possibly selling your business at some point, maybe you're right in the thick of it, getting ready to do it. Really, at any phase, I just want to cover what the entire process is going to look like, how to prep your business, how to find brokers, really everything from A to Z. And this is mainly put together from my past experience of selling businesses. I was industry agnostic, so I covered a lot of different industries: trucking and logistics, staffing and recruiting, manufacturing, online businesses, massage businesses, you name it. And so I was really focused on the smaller market, $300,000 up to that 15, $16 million mark is really the area that I was focused on. So if this fits in your business criteria, this should be pretty helpful on how to get ready to sell your business and how to get it for the maximum purchase price. So, first, we need to determine, is your business even ready to sell? And as you can see here, I have a few bullet points and I'm just going to work through them one by one. And what I mean by is your business ready to sell? Because a lot of people think that you can just sell your business at any point, and you can. I mean, there's a buyer out there for everything, right? But if you want to get the highest possible purchase price for your business, this is how I would make sure I am doing that, right? So it first starts with the financials. Obviously, probably the most important aspect that a lot of people can imagine, but for the most part, buyers are going to look at the last 3 years of your financials. And the reason why is because the SBA will lend 90% of the purchase price to the buyer, but they're going to look at the last 3 years of your profit and loss statements and your tax returns. And so you want to make sure you're putting a heavy emphasis on how your financials look, specifically the last 3 years of your profit and loss statements and your tax returns, obviously. But how do you know if they're good or not, right? Now, you want to see a positive trend in your financials over the last 3 years, meaning you want to see growth in your revenue and your net income for the last 3 years. If you're staying somewhat stagnant, or maybe you're going up a percentage, or you went down a percent or 2%, usually that's fine. But again, if you want to have the highest possible exit price on your business, you want to actually take that time and make sure that the last 3 years show growth, growth, growth. That is going to be the most appealing for the buyer. It's just like stocks. You want to sell when you're high. So you want to sell when your business earnings and your revenue are increasing year over year over year. So if you have taken a dip maybe last year or 2 years ago, I always advise to take the time, take the year or 2 years to really focus on those financials and make sure that they are showing growth over the last 3 years. And then you're going down into customer concentration. And I'm putting this in there because I am telling you how buyers are going to view your business. And you want to make sure that your customer concentration is at or below 15 to 20%. And what I mean by that is you don't want any one customer of yours making up more than 20% of your revenue. Now, that's not a deal breaker. If you start getting over 20%, maybe 25, 30, low 30s might be pushing it. It becomes a little bit more of a red flag, because a buyer's going to look at that and go, especially if you don't have customers or clients under contract and they see a customer of yours, even if they've been with you for 15 years and they're really loyal and they're making up 43, 44% of your revenue, it is a huge concern and a huge red flag for a buyer, because if that customer leaves the day after the transaction, they just lost 41, 42, 43% of revenue immediately. And so you really want to take a look at your customer concentration and make sure that it is spread out pretty evenly and that no one customer is making up more than 20% of your revenue. So keep an eye on your customer concentration. If you need to take some time to figure out a strategy and a plan to even that concentration out, that revenue coming in, even it out over your customers, then I would really advise to do so, because you're going to have a difficult time selling your business, because every buyer, they're going to come in and they're going to see that customer concentration, and it will scare them if it is starting to get over that 20%. Years in business. Now, you probably don't want to sell if you're less than 3 years old, because of what I just set up here in the financials, right? The bank's going to look at the last 3 years. And so if you've only been in business for a year or 2 years, again, I would highly advise that you take the time to build up those financials and have at least 3 years. Now, what I tell and teach to buyers is look for businesses that are at least 5 years old, preferably 10 years old, right? So if you have 3 years of financials, you are in an okay position, I should say, or you are set to sell your business. You have enough financials under your belt to sell, but you do probably want a more years under your belt, I guess I should say, right? Because again, 65, this is more of the buy side, but 65 of businesses fail in the first 10 years, right, of starting. And so a lot of buyers, some savvy buyers are aware of that statistic. And so they look for businesses that are at least 10 years old or at minimum 5 years old, right? So you want to make sure that you have a good amount of, profitable and successful years in business before you go and try and sell your business. Owner dependency. This is a really big one here. Unfortunately, I've seen too many times where businesses do not sell because it is so heavily owner dependent. Now, it doesn't mean you can't sell your business, because if you own, I always use this example like a plumbing business, but if you own a plumbing business, you're going to have a better shot of selling your business to someone who already owns a plumbing business, right? Because they can come in and immediately fill your shoes if you are heavily involved in the operations of your business, because they understand the industry and they're buying within the industry. But you want to still open up your availability to sell to as many buyers as possible, because it's going to create this chance to sell for the highest possible price. And so you want to make sure and work on removing yourself from the business as much as possible. Now, I don't mean don't be involved in your business, because every business owner is, and I understand that, but you want to remove yourself from the revenue generating operations of the business. If you are working 40 hours a week and you're going out to job sites, or you're doing things that's bringing in a large chunk of revenue, it's a red flag, because once you sell the business, we're taking you out of this equation. And then the buyer needs to figure out, how are we going to fill the previous owners, your shoes? How are we going to fill those shoes, right? And if your duties are generating a lot of revenue or going out to job sites and doing the actual work, it's going to make it very difficult for the buyer to fill those shoes. And so I would put a lot of emphasis on maybe training from within, or hiring from within, or bringing in an operator if you have enough cash flow to do so, right? And so if you can take more of a back seat, maybe you focus on sales or the marketing, or you're just the final decision maker on some things, that would be best case scenario. So again, these are all structured around how a buyer is going to view your business, and you want to make sure that it is as good looking as possible for as many buyers as possible. So work on the owner dependency, assess where you're at within your own business, and if you have the ability, I would strongly encourage to start removing yourself, especially removing yourself from revenue generating operations of the business. And if you have an employee there at your business that can take more of a step up and maybe take more of the reins on the operations, put more emphasis on that individual and let them run it for a few months while you take more of a back seat. Because that way you can show that while you're listing your business and saying, hey, employee A has been running this business for 6 months, 12 months, 24 months, right? So you will be in good hands. I have taken more of a back seat in anticipation of selling my business. And that kind of leads into the organizational chart, right? So again, this is going to vary depending on the size of your business, but you want to have a good organizational chart. You want to have people, in charge of your different departments, whether it's HR, your financials, operations, having managers, general managers. Now, again, I know every business is different, and every business has a different size. But you want to make sure that you have a good, clean organizational chart, and you have employees doing a wide range of covering a wide range of different departments, right? And that kind of leads into the owner dependency thing as well. It's not a major emphasis, but again, if you put yourself in the buyer's shoes, okay, who's running HR, who's the general manager, who's the operator, who's in sales, who's doing the financials, right? You want to make sure that you have, John's an operator, Sally's in the financials, Susie's doing HR. So you have people in place, so it's a smooth, seamless transition for the buyer, right? The less resistance for the buyer, the better. And then the market and the economy. So this was a question that I would get a lot when, I was helping people prep for market or whatever it was. And I would hear it from buyers too. Is it the right market? Is it the right economy? Or is this the right industry to buy in? And buying and selling businesses is a little bit different because there's always going to be buyers out there, right? It's just like anything else. There's a buyer for everything. And so I wouldn't put too much emphasis on trying to time the market. As we all know, that doesn't really go well, trying to time markets perfectly. It's very difficult. And the reason why I put private equity here in parentheses is because private equity tends to tie up a lot of money for several years, and so they sit on a lot of dry powder. And all I mean by that is they sit on cash, right? And so they're always going to be out there. Now, you may not want to sell to a private equity firm, and that's totally fine. But the reason I put that in there is because they're always out there trying to buy businesses, especially when it's a bad market or a bad economy. They're the ones that usually come in and buy businesses. And so there's always going to be buyers out there. There's always business owners looking to roll up into their current business using their retained earnings or their extra cash flow in order to buy businesses. And so I really wouldn't put too much emphasis on there. I just wanted to put it in here because I did hear it a lot. And I never really noticed it making too much of a difference, whether what time it was, if it was an election year or whatever, right? So again, just to recap on this, is your business ready to sell? Now, for the most part, you can sell whenever you want. I would say at least, as long as you have at least 3 years um, in business under your belt, then you should be fine. But these are all going to get you the highest possible exit price for your business and attract as many buyers as possible. If you asked me what are the most important ones, I would say financials, customer concentration, and owner dependency. Those are going to be the most important ones that buyers are looking for. Finding a business broker. So this is, a question I get a lot is how do I find a broker? How do I find the right broker? So there's, obviously good broker versus bad broker here. And my suggestion to you is to call around, find as many different business brokers as you can, whether it's local or you just want to do a simple Google search, and set up some calls. I mean, they're going to be extremely happy to speak with you, especially if you check the boxes on everything in this previous slide here. They'll be really, really excited to talk to you. But you want to vet all these different brokers. And unfortunately, there are a lot of bad business brokers out there. And all I mean by bad is that this is a performance-based industry, meaning they are not going to get paid until they sell your business. And so if you can kind of start to think forward here and realize that there are probably some instances when brokers push deals or will try and push you into accepting maybe a bad offer or a low-priced offer just so they can get a payday and get a deal done and move on, right? It happens, unfortunately. And then you also have brokers who will maybe close a couple deals, one or two big deals in the beginning of the year, and they've made their money and they kind of coast and take their time and they're not very attentive. And so it slows and drags the process on, right? And so my advice to finding a good broker is to call several different brokers, vet them out, compare their fees, see what their fee structure would be, because a lot of them are going to do maybe a double Lehman scale, a flat fee, whatever. They're all going to have their different forms or ranges of fees. And I know that's very important for you as the seller, not wanting to pay unnecessary fees. And so compare the different fee structures from different brokers. But most importantly, I would say trust your gut and your intuition. If a broker is telling you everything you want to hear, then run away, right? And so what I like to tell people, is ask the broker some of these questions. Maybe, whether it's true or not, maybe tell them like, hey, I had a really bad year last year. Like, what, do you think we'll be okay? Maybe not really bad, but hey, we dipped 10% or 5%. What do you think? Or I do have a customer concentration in the 40s for one of my clients. Do you think we can still sell? Or I'm pretty involved in my business. I go with the job operations. What do you think? Because a good broker should tell you, what, hey, take 1 to 2 years and let's fix these things, because that way we can sell you for a higher price and we can get buyers in. We can get a little bit more buyers in and attracted to your business, right? So if they're starting to tell you everything you want to hear, and of course we can do this, and yeah, let's get going, I'll send over an engagement agreement, I would be a little bit weary of those business brokers. Now, I might be a little bit biased because I am on the younger side, but in my experience, I have noticed that a lot of the younger brokers, business brokers, tend to be a little bit more aggressive, and they've got that ambition behind them, and they're willing to go out and pardon my language, but go bust ass to try and get you a buyer and close a deal for you. And so I have noticed that in my experience. But then again, the older generation will have more experience. They will understand the process very, very well, and they might have a bigger network and connection to other buyers that they can bring in to this deal. And so it kind of leads me into, this industry bullet point down here is I would ask the brokers, what industries do they focus on, or what industries have they seen the most success in? How many current listings do they have? How many deals have you closed this year, Mr. Broker? So I would ask them all of those questions and kind of just sit and listen and again, trust your gut and your intuition, because you definitely don't want a broker who's going to push you and force you into accepting an offer if it's not something that you want to accept at that time. I unfortunately have seen that happen a lot of times, and it's too bad. So really take your time to look around, to call these brokers, to have conversations, to trust your gut, how those conversations are going, and then compare fees from there, and then make your decision once you're all done having those conversations. And then what can you expect the process to be like? Now, I always like to tell people this is going to take anywhere from 6 to 12 months. And I think that's kind of surprising to a lot of people because, a lot of people are aware of the real estate transaction process. It can take a month, maybe 2 months to close. This is going to take 6 months to 12 months. Again, it just depends on the size of your business. But expect it to take a minimum of 6. I've seen deals close in 4. But then I've seen deals go over 12 months, and that's just the length of how the process goes. But how it will go is you first need to figure out the price tag on your business. How much is your business worth, right? An appraisal on your business, if you will. Well, that's called a business valuation. As you can see right here is the first bullet point. You're going to want to get a valuation on your business. Now, the broker will help you do this. And so obviously the first step is finding a business broker. And then they're going to either run an in-house valuation or they're going to shell it out to a third party company to run a valuation on your business. And that's when they're going to ask for the last 3 years of your profit and loss statement, your tax returns, your balance sheet. And they're going to really comb through your financials, look for anything that they can add back to your net income, which will increase your purchase price. And then they'll apply a multiple to your business, which will give you the valuation or the enterprise value or the listing price of your business, right? So that is the very first thing. That sets price expectations. Now, again, this kind of goes back to good broker versus bad broker. And I understand that you as the seller want to sell for the highest possible price. In order to do so, I obviously suggest that you have all of these things in order. But a good broker should set realistic price expectations with you. And, I see a lot of listings for businesses that are priced way too high. They just are, right? And so you can take a quick Google search of whatever your industry is and just say, what multiple do businesses in XYZ industry sell for? And you should find some articles and some reports on what multiple businesses like yours sell for. And let's say usually they're between a 3x and a 5x. And if your broker comes back and says, hey, we can sell you for this listing price, and it ends up being like a 6x, then they're just trying to get your business, and you're most likely going to have a difficult conversation at some point with that broker because buyers are going to come in lower than that price. And it's just it causes headaches and chaos and concern. And so a good broker should set realistic price expectations, shooting for the high side. Now, don't get me wrong. Like, I always set the bar high, right? Shooting for the high side. But you want to make sure that they're giving you, realistic price expectations. And you also need to be comfortable and aware of the actual listing price of your business because, again, I understand business owners have put in 10, 15, 20, 25 years of hard work into this business. And a lot of the times owners think it's worth a lot more than what it really is, unfortunately. And so that is just usually the first conversation you have with your broker. And it can be a difficult conversation at times. But I will tell you, if you have all of these things in order, you should be getting close to the higher part of your valuation, if not right at it. So after you have a valuation, whether the broker runs it in-house with an analyst or they have a third party run it for you, and you can go get a valuation on your own too. You can find third-party valuation companies to go get a valuation on your business, and they'll tell you what your business is worth right now, right? But after you get the valuation price, the broker is probably going to have you sign an engagement agreement before that, and then they'll have you sign a listing agreement. And once you sign the listing agreement, they will start building out your marketing materials or your business packet, or what it's called in the industry is a confidential information memorandum. As you can see, that CIM down here. So this will be a nice long packet that is shining the light on your business. Who you are, what's the strengths, weaknesses, opportunities, threats. It's called the SWOT analysis. It'll have a little financial overview, some growth opportunities for buyers, some industry research and background. And it'll cover your organizational chart, who you are, how long the business has been around. So it's a little bit more of a deep dive on the business. It's a nice pretty looking packet that you can present to buyers. Now, not you, but the broker will present to buyers. So they'll put that marketing packet together, and then they'll take you to listing websites, right? BizBuySell, BizQuest, Axial, LoopNet. They'll put you on all these listing platforms where you will start now attracting buyers to take a look at your business. Now, the reason why I say good broker here in parentheses is because, a good broker should have a list of buyers for some industries or even some private equity firms if you're open to selling to private equity. And so a good broker, once your business comes across their desk and they're getting ready to list it, they should have maybe a handful of buyers that they can call out to and float your business to them before listing it, right? And this will just cause or create a faster process for selling your business, and maybe, less headaches and less work on your end as well. So after your business has the valuation done on it, and after your business has been, you've signed a listing agreement with the broker and they've created your marketing materials and your SIM packet, they're going to list you on all these different platforms. As buyers start to trickle in, it is the broker's job to determine realistic buyers and non-realistic buyers and really vetting the buyers properly before bringing them to you. And usually the first step is a buyer-seller call. There's usually some initial questions through email between the broker and the buyers, and you might have to answer some of these questions for the broker. But once you get past that phase, there will be a time to have a call with the buyer, and they are going to ask you some questions on the business, and you can ask them questions on or about themselves as well, and maybe what their plans are and their background is. Because again, you don't have to sell to them. It's your decision on who you want to sell to, right? So the buyer seller call comes after that, and then once you should have a handful of calls with the different buyers, and then after that comes a letter of intent, which is a non-binding contract where buyers are basically going to present a rough draft offer to you, saying how much they are willing to offer, how they're going to offer it, and some other contingencies in there, if you will, right, for the deal. So the goal is to get a bunch of LOIs across on your desk so you can compare different offers and make a decision from there. And again, going back to, this slide, if you have all of these things in order, you should hopefully get a handful of LOIs to compare and put next to each other and make a decision from there. So once you do get an LOI and you have an accepted letter of intent, you will move into a phase called due diligence. And this can last anywhere from 30 days to 60 days, maybe 90 days if your business is on the larger side. And this is when you pretty much fully open up your business for the buyers to review everything. Any documents they want to look at, financial documents, they'll have a bunch of questions on, the operations, some legal questions about the assets if you have any in your business. And so this due diligence phase is usually the phase where sellers get pretty tired. It is a lot because the buyers are going to ask a lot of questions. They're really crossing their T's and dotting their I's here. And this is usually when the buyers are going to bring in some other people to help them. They might bring in a CPA or a financial analyst or somebody who's done this before, or someone that they know in the industry that can help them ask questions that are specific to your industry. And so it can be a lot. It can be, it can be pretty extensive. So just be prepared for that. And the best way to be prepared for that is just having all of your documents in order, saved on your computer, where you can just file them and send them off to the broker to answer these questions. Now, keep in mind, every buyer is going to be under an NDA throughout this process, so you don't need to worry about confidentiality. The broker should put a huge emphasis on this throughout the entire process with everyone that they speak with. But every buyer before getting to a buyer-seller call will be under an NDA. They will be under an NDA before actually looking at the SIM packet as well. So None of this information can be shared. It's usually kept from all employees as long as you don't tell any employees. They're not allowed to reach out to any employees. They're not allowed to call, the front desk and ask questions. They can only speak to the broker who's representing you in your business. So the due diligence phase, like I said, this is really for the buyer to dig through the business and make sure this is something that they want to move forward with. And at the end of the due diligence period, this is when the buyer is responsible for drafting the purchase agreement with their attorney, and then they will send it over to you, your broker, your attorney. You'll want to consult with your attorney on the purchase agreement. And this may take a couple of weeks going back and forth. As you can imagine, you're probably going to be negotiating different line items in that purchase agreement. But once you come into an agreement on the purchase agreement, the buyer is usually working on financing simultaneously while working on the purchase agreement while finishing up due diligence. So the buyer is doing a lot of things at once, usually at this time of the deal process. But once you get the purchase agreement done and finalized and executed, the buyer should have full funding from the bank or however they're funding the deal, and you are getting ready to close. So again, I kind of touched on this, but how long will this process take? 6 to 12 months, I would expect. Probably right in the middle of it, maybe around 9-10 months. It just depends on the size of your business. Sometimes, the larger the businesses are, there's more analysis to do and more checks and balances to be had. And so it can take a little bit longer than that. But again, I will tell you, if you have all of this in order, clean financials, good customer concentration, you've been in business for a while, it's not too heavily owner dependent, you're going to have a lot of buyers coming in, and it will speed the process up. And your broker will have the ability to put a little bit more pressure on some of these buyers to get everything going and get everything submitted on time. I will say, if you want to speed the process up, obviously it's best to have all of your documents in order, but respond to your broker if you can same day, if not next day, to really get everything going. Time will kill these deals. I've seen it time and time again, no pun intended, but time will kill deals. And if you take your time getting answers across, buyers will move on, unfortunately. So you want to make sure everything is moving at a good, steady pace throughout the entire transaction process. So I hope this helps. This should really cover the entire process on how to sell your business, how to make sure it's ready to be sold for the best and highest possible price. If you have any questions on this at all, just let me know below in the comments. If you want more information, more content, I have this on my YouTube page along with my Instagram page. But I hope this helps. And if you know someone trying or looking to sell your business, feel free to send them this video. But again, thank you for watching.